Hello everyone, Tom from Market Zone here with a new weekly market analysis video in which we're going to cover some of the charts that I mentioned in this week's newsletter. We're going to see what has changed since I posted the newsletter this Sunday and how we should respond to the price action that we've seen so far this week. Hey guys, what's up? Tom from Market Zone here. As usual, in the weekly market analysis, what I'm going to do is to review some of the charts that I mentioned in this week's newsletter. In this specific video, we're going to go over DXY's chart, EURUSD, SPX, and a chart that I didn't mention this week, USDN, that broke below key support zone today, and I'm going to explain to you the situation right now with your USDN and what are the trading scenarios that you should monitor. But first, let me thank you guys for coming back to this channel. Thank you for watching this video. Thank you for the love that you are showing and the support on social media. And if you aren't subscribed to this channel, don't forget to subscribe now or at the end of this video. Activate notifications also so you won't miss the next video that I'm posting. Now we are ready to start, and I want to start with DXY. That's a dollar index daily chart that you see here with the bullish scenario that I mentioned 2 weeks ago, a bullish grab, bullish harmonic pattern that generated a nice bullish move last week in DXY. But this Sunday I mentioned that I see a potential pullback in DXY, and that's exactly what we are seeing. Yesterday we got a first bearish candle, today we got a continuation move that reached, DXY actually reached to the first target zone that I marked for this pullback move, the fast SMA line. That's the 18 SMA line that you see right here in a yellow line. The potential target zones that I mentioned for bearish pullback in DXY were 89.5, that's pretty much where the fast SMA line is right now. Then in case that DXY will continue lower, we have 89, and then the final target zone is 88.5 with a potential double bottom scenario, a retest of this weekly structure that you see here, and the uptrend line, the weekly uptrend line, which I'm not ruling out such a deep retracement, especially following the strong bearish move that we saw in dollar index in recent months. But first we should focus on the first target zone, which means the first support zone, which is the fast SMA line that, as you can see, buyers are reacting to. We see buyers slowly stepping in, trying to push DXY's price higher. It's still 90 minutes to the close when I'm recording this video, so we will have to see what DXY's chart will be at the end of the day. If the buyers will be able to push DXY's chart, DXY's price towards the open price, that can create even a bullish pin bar or some sort of a bullish pattern on lower time frames that you can trade based on the assumptions that buyers are ready to fight over this price zone and maybe preparing to move towards the next target zone of the bullish wave, this bullish wave, which is the 50 MA line and the downtrend line that you see right here. That brings me to EURUSD. That's the daily chart that you are watching right now, and as you can see, the bullish trading scenario, the short-term bullish trading scenario that I mentioned in this week's newsletter has already reached both of its target zones. Zooming into the 240-minute chart shows us how EURUSD bounced from the potential support zone, easily climbed above target 1, which was this blue rectangle that you see right here, and reached secondary target zone, which is inside this resistance zone that you see between 1.235 and 1.24. The question now is, what's gonna be the next move in EURUSD? In order to answer this question, I'm gonna zoom out back to the daily chart and show you that EURUSD is now testing the fast SMA line as resistance, and also this structure zone that you see here, but the fast SMA line as resistance, just as DXY was testing the fast SMA line as support. So a mirror image in EURUSD and DXY. That means that if DXY will find support near the fast SMA line, EURUSD should find resistance in this zone. Besides the fast SMA line and this minor structure zone that we see here below 1.24, what leads me to think that EURUSD is heading lower and not higher is last week's price reaction, price action that we saw when EURUSD approached the monthly downtrend line that you see right here, inside the weekly structure zone, weekly resistance zone, inside the PRZ of a bearish crab, as you can see, and following a double top scenario. So the strong price action that we saw, the strong reaction that we saw to this resistance zone, to this weekly resistance zone, leads me to think that what we are seeing here is a pullback that I anticipated with the bullish bet scenario, but it's a pullback that will eventually lead to another bearish wave that will drive EURUSD towards one of these uptrend lines that I mentioned in this week's newsletter. So I'm looking for some sort of a reversal, some sort of a bearish signal inside this price zone in order to short EURUSD back down towards 1.22 as a swing trade opportunity. Now, if you think that EURUSD is heading higher, meaning dollar index going lower, no problem. What you can do is wait for a breakout, wait for a close about 1.24, and then try to trade the breakout that can lead EURUSD to retest this monthly downtrend line near 1.25. Jumping briefly to the S&P, SPX continues to climb despite a red opening today. Now we are back in green. SPX pretty much continues the pullback move that I projected last week when it formed a double bottom scenario near the 200 days MA line. You have to understand that in strong uptrends like we had in the S&P in recent years, months, weeks, you have to respect a support line like the 200 days MA line. You have to consider the option that it will push the price back up despite the panic, and that's exactly what happened. I marked 2700 as the target zone, the first target zone of this pullback move, and I think that that's where SPX is heading to. Near 2700, SPX will retest the broken uptrend line that you see right here. This broken uptrend line already was proven as resistance last week when the price tried to climb above it and was rejected and was sent back to the 200 days MA line to test it as support. Also, besides this uptrend line, this broken uptrend line, we have the 50 days MA line that also acted as resistance last week, and it will be interesting to see how the price will react to the price zone between 2700 and 2740. That's pretty much where the price zone is. So wait for the pullback, and then if you want to short SPX, that's where you should look for weakness signs. The last chart, the last forex pair that I want to talk about in this video is USDN. Now that's a chart that I didn't share in this week's newsletter, but if you've been following the market zone for a while, you should be familiar with some of the price zones that I'm going to talk about, because this chart and these price zones were shared with you in previous editions of the weekly market analysis. And what happened today is that USD yen's price broke below a weekly structure zone that I've been monitoring for the last couple of weeks. So let's see what happened. As you can see from this chart, since March 2017, USD yen has been trading inside a weekly trading range between 108 and 115. Between March 2017 and this trading week, the only time that USDN exceeded the borders of this weekly trading range was during September 2017, when USD yen spiked to 107.3, and that's exactly the level that we are testing today following today's breakout. In the previous time that USD yen spiked towards 107, we saw a strong bullish reaction, strong reversal that drove the price back inside the trading range, and from there straight to the top. This time, not only that we are testing the same price zone that led to a 700 pips rally in USD yen, we are also testing X, which is the X point of a bullish bet that is still relevant and valid. In addition, we have a smaller pattern, we have a small harmonic pattern that you can see here, a small bullish butterfly that is still relevant. The price spiked below the PRZ, but it is back inside the PRZ now. So to sum it up, we have two harmonic patterns in play right now. We have a bullish bet that hasn't been violated because the price never closed below X, and we have a bullish butterfly near 107.7 that can drive USDN back up. Short-term trading opportunity right here with a bullish butterfly, trading 107.7 with a 30 pips stop loss, and targeting 108.3, 108.5 as the potential target of this short-term pullback move that can that this butterfly can lead to. From what I've said so far, going back to DXY's chart and the potential support that we have with the faster May line, through the harmonic trading scenarios that I explained here with the bullish bat and the bullish butterfly pattern, and the potential double bottom scenario with September's low, a low that led to an extreme rally in USDN. If you are looking to be bullish on USDN, if you're looking to buy USDN, you have a potential buy zone right here near 107.5, 107.7. If you are looking for better confirmation signs, you should wait for the price to close back up above the trend line and above maybe the faster May line, meaning above 109, 109.5. Then you can place stop loss, wide stop loss, and look at it as a swing trade opportunity. But if you want to be aggressive, here you have a potential entry zone in USDN with a pretty tight stop loss below X here, that you can try and bet on a bullish move in USDN. Of course, the first target zone should be 108.5. You need to respect the fact that this structure zone was broken and can act as resistance now. And on the other end, if you are bearish and you think that USDN is heading lower now that it's broke below structure support, below a weekly uptrend line that you can see right here, the same green line that you saw in the daily chart, that's a weekly uptrend line. So if you think that the breakdown is real and will not turn out to be another false breakout, you have potential sell zone. You have potential sell zone between 108.5, 109, maybe 109.5. That's a potential. The support zone that we saw till now should now act as resistance. We have the resistance of a broken trend line. We have the resistance of the faster May line that is approaching from above. We have the structure resistance. So if you are bearish, 108.5, 109 is where you should look for bearish reversal signs and look for bearish continuation trades that will drive USDN even lower. That's it for this week's weekly market analysis video. Thank you again for watching it. I hope that you gained some information that you can use in your trading. And don't forget to subscribe to this channel, activate notifications, don't miss the next video, and don't forget to subscribe to the weekly newsletter. You can do it by visiting www.themarketzone.net. See you in the next video. Bye.